Welcome, everyone. This is George Roberts. Can you hear me? Will someone give me an acknowledgement? Yep, I'm seeing a yes, so a couple of yeses. Okay, so that's good. This Tech Talk is being recorded. On your little screen there for the webinar, you should see something that says handouts. And there's a PDF there. If you download it, Matthew will be referring to it, as well as Ron during the presentation. Anywhere along the way you've got questions, there's a section down here for questions, and you can just enter them. They'll either be answered by the presenter at the time, depending on whether they think it fits in where they're at, or we will pick it up at the tail end. Protocol is pretty much the same. Matt Sarles is going to go first, covering the technical part. Then Ron's going to show you how to use this thing. And then we have the Q&A. But I just want to cover one other thing that's not on my charts there. I recently put up a new web page. If you go and to the website, click on support, under there you'll see something called Tech Talks. This page will start to show all of the Tech Talks that are coming. This is the last one right now. I have to make some changes there to show what new ones are coming. And then the previous ones are there. So you get the video, the downloads of the PDFs are all there. So with that, we're ready to go over to Matthew.
Okay. Hi, everyone. I'm Matt Sorrells. Today we're going to be talking about the volume at price indicator, which we added in HGSI last year. The PDF that you can get in the handouts, it basically is it's the help for the indicator. And you know, if you have questions about any of these fields, this indicator is vastly more complicated than a lot of indicators we've done, even though it really actually is a simple concept. But in order to present it graphically, we've got a lot of, there are a lot of options. And I'll be talking about what they do and how they work here during this little bit. But if you have questions about parts of the indicator, this documentation is the best guide to how the indicator's options work. Okay, so I've basically got just a standard starting up screen, and I'm going to just make a new view. We're going to do this just like these others. So when you go to add an indicator to the view, with the new search, it's easier to type something and have it find it. Now, one thing that's kind of I wanted to point out here is that each one of these indicators actually has search fields that aren't visible. So volume at price obviously will find this indicator, but also and VAP will find this indicator, but this indicator you can also find it by typing VPOC. So the idea here is that we've got more search fields than you can actually see. So if you're trying to find an indicator, just stick something in there. You'd be surprised at how many search fields we actually have now to help you find the thing you're looking for. So volume at price, it's got this huge, giant set of options. And so I'm just going to go with the defaults here, and then I'll change it, and we'll explore how it goes. Now, the first thing, when you first add volume at price to a chart, and let's just bring this up, you'll notice that the volume at price covers the entire price. And so you have these giant bars, and they're completely blocking your price. And this is because you bring up the chart view, the HGSI draws its indicators in order of each window. So inside the price window, it draws the first indicator, and then it draws the second. And so in this case, the volume at price comes on top of the price. And this is why over here, you can't see the price. And so now you can move indicators up and down so that you can control the draw order. And this is something that's new. We didn't used to do this years ago. And so if you want to see the price bars on top of the VAP, you've got to change the basic order. So in this starter version of the VAP, with the default options, you can see the major themes behind this indicator. So the first major theme, let me see if this works. The first major theme is that it's a box, and the box it goes back a number of periods, which is what the periods control in the indicator picks, and the high and the low, I drew this a little too high, but the high and the low range is the high and low range that the stock traded in during that box. And that defines essentially the field of play for this indicator. The indicator then divides that vertical range from the lowest price to the highest price into a set of buckets. And these buckets are what become these volume bars. Each bucket is an even amount divided into that range. So by default, there's 25 of them, and so you end up with 25 horizontal bars. Inside the indicator, if you lower the number of volume buckets, it'll change the number of bars and how much it divides this price range up in. And those are really the only two controls that this indicator works off of, for the most part. I mean, the other ones all control how it draws and what it draws. So the way this works is each day, so here's a day, during that period of time, there's a certain amount of volume, and the price of the stock during that day, from its high to its low, every bucket that it crosses will get credited with the amount of volume down here to those buckets. And then that's summed up for every day on the chart, all the way across. And it builds up these, basically it takes this volume and moves it sideways. When this ending result, it becomes essentially the amount of volume that is exchanged at each price range of the stock. So on this chart here, you can see that most of the volume, the price of most of the trades during this 90-day period was around 48 to 50 here. The indicator also, let me bring this up. The indicator also lets you count the volume using positive and negative values. So the idea here is that on any day where the close today is higher than the close yesterday, that's positive volume because the price moved up, so it's accumulating. And if any day where the price moved down from yesterday, then that's negative volume. And those two are summed together separately when the volume from the bottom here is moved over into the price range. And so you get a sense for volume that was a downtrend and volume that's an uptrend when you graph. Now the total length of the bar is the same whether or not you split the volume into positive or negative. It's only the ratio of how much of it at that price range was positive volume and how much of it at that price range was negative volume. And so you can kind of see here that most of this volume here actually was selling off more than not, for example. Now, when we draw the graph, there's this concept with this volume at price is that it's called the volume point of control, and it's basically the largest bucket out of the set of buckets is defined as the volume point of control, and it's what scales all the rest of the buckets, because it's scaled automatically to the 90 periods or whatever you put in here to the number of periods. And then all the rest of the bars are scaled relative to that. The volume point of control being the largest bucket of all the buckets. The lowest point on that bucket is defined as the volume point of control. And any buckets above that point are drawn in the buckets above the volume point of control color, and any buckets below that point are drawn in this below color. Yeah, it didn't work. Let's try that. So, and this is why, in this case, you can see that there's a shading difference. So the brighter shade green is above, and the darker shade is below. You can kind of think of the volume point of control line as casting a shadow. And above the line, with this default color scheme, is a lighter color, and below the line is a darker color. And of course, you can change the colors to whatever you want. These default ones are just that, defaults. Now, when we compute how much volume goes in each bucket, by default we count every bucket that is crossed by the stock's intraday low to high value. But you can change that to only count the close. With this checkbox here, only count close, not range. And so instead of counting the range that the stock traded in, we would only count the close, and so it would only give credit for that volume for that one particular bucket. And so you can end up with that option on. You end up with there were no closes in this range during that 90-day period, and so you end up with these blank spots in the graph because the stock didn't actually close that bucket range at any time during the 90 periods. And some people might prefer that because close is a much more true number than the intraday high to low, the way the stops are being ran these days by the high frequency trading. But it makes for a very gappy chart, and so as a rule I don't think it's the best volume view, but and so it's not a default, but the options there, you can do it. Now because this dialog has 10 color chiclets, it seemed unreasonable to make people have to go through and set all 10 of them every time they wanted a different color scheme. And so for this indicator, we added a new color presets control, and so there are 3 versions of the color scheme that have been set up, and we may add more of these if you find more of them. You know, if people would suggest colors schemes that seem to work. And so there's this default color scheme, which is the green and the red with slightly dark edging, this little line around the edge, and yellow VPOC line. And then you can get it with no edge, and to get that, essentially you set the edge color to the same as the actual color. And then there's a light green purple that looks fairly good on a darker screen. All this drop down does is change the default color chiclets. It doesn't change any of the other settings. It's just shortcuts for, it's a user interface shortcut essentially for setting the color controls. The volume point of control is normally drawn as a horizontal line at the lower end of the largest bucket, the volume point of control bucket. You can turn that off. You can tell it to not draw. You can also draw the volume point of control as a graph line. And let me bring that up. I'm gonna make this a little darker so you can see it better. Let's go with a brown. So when you draw the volume point of control as a graph line, every day on the chart there's 90 periods backwards, and that 90 period box has its own volume point of control. And this, in graph line mode, this is the volume point of control as it changes every single day. And you'll notice there are a lot of plateaus in the volume point of control. It's just a side effect of the way the math works. And then there are also these kind of strange days where it ricochets off because volume coming in and out of the stock. Because when you think about it, as the window moves back in time, 90 days here, when it shifts one day back, a new day is added and a day is subtracted, and it causes the volume point of control to I won't want to say freak out, but it does cause these discontinuous blips. But at the same time, this is the volume point of control, and you can see it changing essentially as the stock changed its volume and trade patterns as time goes on. And you can also, the volume point of control can also be drawn as both the graph line and the horizontal line. And in this case, you can see the line. The graph line represents the volume point of control of the very last day on the chart. And by last day of the chart, it's the last day on the right-hand scroll of the chart. And as you move the chart one day back, we redo the entire volume at price relative to the very last day, whatever that is visible on your chart. And so the position of the thumb actually does matter. As you can see here, when you're scrolling through, it recomputes based on every day that you put on the right-hand side of the chart. And that's why we don't have an option to put the volume point of control, the VAP lines on the left-hand side, because everything is relative to the rightmost day of the chart and flopping the options. There was someone asked a question of whether it could be put on the other side, and if we did that, it wouldn't actually line up with what it really was the volume at price of. The last option on here is this option for displaying the buckets. And the reason why this option exists, normally if you bring up our data window, every day we'll tell you what the VPOC is, and that's what the blue line here is, because I made it visible as a line. And so in the data window you can see what the VPOC is every day, and that can be really handy for the volume at price. The VPOC represents a severe support and resistance line, because it's the price that the stock traded at most during that 90-day period. And so this is it's a key support indicator, it's a key resistance indicator. And so being able to see what that is on each day that you put the crosshair is kind of important, because you can tell whether the stock's above that support or below that support. But there was no way on our data window is based on the crosshairs day, and so there was no way to get any visible information about the buckets themselves. And so this extra option was added so that depending on the position of the mouse vertically, which is a new thing for us, we tell you about what the bucket your mouse cursor's vertical position is on. And so in this case, this particular bucket, the total volume, and that's the green plus the red, is 1.1 million, and the red volume is 780,000, and the green the green volume is 780,000 and the red volume is 361,000, and it's 68% red or 68% green in this bucket right here. And then the price range of the bucket, which is the low value of the bucket and the high value of the bucket. And so basically this option was added so that there was some way for you to get these bucket values out of the graph without having to show all 25 buckets every single day in the data window. I actually think that's all of the indicator options mostly that, and you can specify which corner to stick the text in if you'd like, as well as the font and color. This is the same kind of options our other text options have. You can make the VPOC line invisible by telling it to not draw. It doesn't have an invisible option. You can just pick not draw. And you can also turn off the volume buckets. So if you just want the VPOC line by itself, you can turn off the draw volume buckets, and then it'll just draw the VPOC as a line. So you could just use it as a kind of support and resistance line. The VPOC line, even though you're not drawing the volume bars, it still does use the number of volume buckets, and so if you were to lower the number of volume buckets, you actually get a very different kind of chart. You get these buckets, there are now 12 of them instead of 25, and so each bucket is larger, and what the price range each bucket represents is a larger amount. And so even though the volume buckets aren't being drawn, they're still being computed, and so the two parameters, the length of time and the number of buckets, does still apply. Okay, I think that's about it. If there were any questions about the indicator itself, otherwise I think I'll hand it over to Ron.
And show my screen. You see it? Yeah, I'm getting some yeses. Okay, thank you. Let's see the audience view here. Anyway, thanks, Matt, for putting this indicator in and explaining it. You can see that there are a lot of options, and I am primarily just using the base settings. Now, I have put, as you probably know, on the VPA add-on, I have put some views in there for you, and I've added a few. I'm going to just go through some of these today that I've been playing with, trying to come up with some different ways to use this indicator. Also, when I shipped them out originally, I had 10 spaces here, but that really doesn't work. So on my charts, I have eliminated that in the window, and when I send these out as an update on the add-on, those will all be fixed for you. But in the meantime, you can certainly build your own charts. Now, what I've done here, and let me see where I am on this. This is the first one right here, volume point of control. And in addition to the volume point of control, which is the yellow line here, and this is 90 days, I have put the VPA indicators in here because they really do work well together. We can see right here during this 90-day period, and what is this stock? I don't know. It's a little stock OCLR. I just happened to grab it for some reason. But you can see what Matt was saying about this volume point of control right here. There was a lot of resistance and support in this area, and that's why this line, here's where the 90 days ends, and you can see that this they were battling back and forth, and that's why this line extends out here, because that's where most of the activity was. And then it finally broke away from here, and as it broke away, notice that this bucket here is primarily green though, if you look at it visually. So that means as these bars cross back and forth that more of the activity was bullish, or the stock was closing up more than down in this time range or at the volume point of control. Let's see what I have up here. But as you can see, as this stock started moving up here, notice here is the gap up, and notice that these buckets are primarily green because the price is going up. So there was a lot more bullish control here, and then it dropped down here. It looks like a big gap down, and then it worked its way higher, but primarily bullish activity. Let's take a look at another chart. Here is a stock, Hawaiian Holdings. It's an airline, and it's been one of the leading stocks during this rally. And you can see just a quick glance of this that it's primarily bullish based upon the buckets. Why? Because obviously because it's going up. Notice how well these flags also work. Here these are all down flags until we got into this area right here. Let me blow this up a little bit and I'll zoom in on it so you can see better. These are all effort to fall VPA signals, and then we started getting some accumulation here, some tests and confirmation of the tests, and then it started working its way higher, had a gap up, and here the stock was changing hands, kind of stalled again, but notice that it was as it was stalling, we're getting several of these tests, these magenta squares, and that's because these on these days, and I'm sure you all know this by now, as these close near the high of their daily range on lighter volume anyway, that is a test for supply. It's testing to see if there are buyers down there. Now it did slip down here, and the market turned around about right at this point. I believe this was around the 11th, and this group was one of the first groups that really started showing a lot of strength. And notice that it was below the volume point of control at this point, but this is a 90 period volume point of control. And you know, this stuff really changes according to the length of time that we're using. Now let me zoom back out on this. Let's get a different look at this.
One thing it's really important to realize is that in the past you can't use today's volume point of control to validate previous support and resistance. So if you scroll the chart so that that day where it started dropping off is actually the rightmost day, you can see where the volume point of control would have been back then. Go back a few more days. Go back so that
right or left?
To the left.
Back in time.
Back in time. Keep going. Slow up. Stop. Now go forward. Go forward in time just a little bit till just before it started falling off. Keep going.
Okay, there we go.
Now, if you make that that 12/28/15 the rightmost day, so go back a couple of days, 2 days.
Let me put my crosshair on.
So you want the yellow, put the yellow dot day, yeah, the first one, yeah, that one. Now make that the rightmost day.
Okay.
And so you will see what the volume point of control, wrong way.
There we go.
There. Now, the volume point of control on that day would have been about 37. And so you can see there really was a support line at that point even then, but you can't actually validate your previous support and resistance theory using today's stuff, because by looking at today's values, you're actually seeing the future. So you do have to kind of scroll back to use this, but you can see that there really was a volume point of control even then, and it would have broken through that as it is now. Step forward one day at a time, and let's see how it acts versus this line. Now notice how it did really drop below the volume point of control in the past, but that won't always be true for every stock. It's you can't, when you use these things that measure things in the past that change continuously, you've got to be very careful to not say, well, I would have sold it back then. You need to go back and actually look at what the values you would have actually seen then would have been. But in this case, it really did clearly break down and would have signaled that you're on the wrong side of the volume point of control.
Yeah, so the bulls really lost control at that point. You know, here were two negative VPA flags prior to that also, and then here is a bullish no supply, it looks like, but it did break down below this. But you can see the congestion area right here, and then when that happened, I just assumed that there was some panic that set in as it started falling. And you really need to just look at the right side of the chart, though. Wouldn't you agree, Matt?
Yeah. Well, I mean, the way we've implemented this indicator, and there are other ways of doing this indicator. There are millions of ways, but our implementation, it uses whatever the rightmost day of the visible chart as the look back start. And so, yeah, we're very pinned to that right-hand side. Now, some people also pointed out the red bars were resistance at the VPOC, not support. You have to realize that support and resistance are relative concepts. The stock above the VPOC is going to get support, and below will get resistance, and that changes based on how it, you know, the stock moves in and out. You also have to realize that the support and resistance may be more the total bar and not just the red and the green, because that's the red and the green is over a period of time, and you need to, it's more of a summary of the volume action during that 90 days and not quite the same thing as traditional resistance or supply.
Isn't this interesting? It came down, rallied back up to the volume point of control and failed again.
So scroll the chart back so that day that it rallied to is the rightmost day. No, go the other way. Go the other way.
Okay, yeah, it's shifting again, of course.
Yeah. But I'm curious as to where it was. Yeah.
Oh, I'm sorry. One too many.
That's good. That's good. And there it crossed the VPOC during that day, but then the next day I think it started falling off again, didn't it? It closed under the VPOC, but it tried to break.
But on this day too, there was one of the transfer of ownership signals, because it got up to this resistance area and it backed off.
And notice how there was a huge amount of volume on that day, and so it is interesting that line, the VPOC, really was a strong amount of resistance in this stock, a huge amount of resistance, which so I don't think it was able to break. Yeah, and it never did manage to get above that. And now the VPOC begins to change because the amount of volume, that big volume spike day will move this volume point of control. And so you get this kind of effect. But now notice how it's broken out above.
Yeah, let's go back here a little bit. On this day here, here was a test and a confirmation of that test on the same day. There was an effort to rise, and it blew past this VPOC right here. And notice that this is lower than this one that failed up here. The failure was up on this bar right here, remember? So now it is blowing past the new volume point of control right here. But, you know, on that day, this is what it looked like. And we can certainly see the volume point of control shift. And notice that as this goes up, of course, this is dominated, the buckets are dominated by green buckets because of the strength of the rally. Yeah, you really need to go back in time and look at that and see where the volume point of control was at that time. But it's all going to change as we choose different time periods. Let's just stay on this same chart, okay? And
well, one of the questions on how does this compare with the volume weighted average price? Traditionally, the volume weighted average price isn't really used with end of day data, but they're very similar kinds of concepts, and so the VPOC could be seen as a version of an end of day version of a VWAP. They're definitely related, but the volume weighted average price is generally not seen on non-intraday ticks.
okay, now here's where we were, the 90. If we drop all the way down to a 30 period, obviously it's going to have a huge change. Now let's go back in time on this one. Where it started falling off. Now this time period may be too short. I'm not that's a problem with all these variables, isn't it? But here is a 30 period, and you can clearly see that there was a lot of activity where this was taking place. Oh, did I come all the way back? I'm sorry, I screwed it up. I want to get back over here. Okay, so this is a 30 period with 25 buckets, and here is where the stock started breaking down again. You can see that the volume point of control on a 30 period was much lower away from the actual price at this point. And there was just a little activity up here as the stock made its high, and then it started backing off again, and the positive and negative were about the same. And then this was obviously all green up here before it started rolling down or coming down. But using this in conjunction with these flags, I certainly think is a much more powerful way to use this. Just a second here. This indicator. I'm not, I've kind of been using 90 days as my standard, but I think we need to look at other time periods here because of the rapid shift. So let me show you something that I'm experimenting with today. Matthew has not seen this, and nobody else has, but what I was messing around with today is getting rid of all of those buckets and color coding these different volume at price. The yellow line, which you cannot see in this chart because it is overlapped with, it's at 2397. Well, here I need to get it back to the last day. It's at 45. The 250 is at 2317. I'm sorry about
yeah,
that.
it scrolled. You need to zoom out. The VPOC's
Okay.
not always guaranteed to fit. We use the price
I'm
scale.
sorry. Okay.
Yeah.
No wonder I was confused.
Yeah, well, it's a hard call. We could have changed the scale for that so that the VPOC line would always be visible, but if we did, then you would get a much zoomed out view all the time, as opposed to just using the price scale, which is really what the volume at price indicator was supposed to use. So it kind of shares the prices scale, and so you can end up with VPOC lines that aren't visible. It's a side effect. I had to make a choice, and
No, you did the right thing. I just I got confused there because I couldn't see the yellow line. Then I started looking at the numbers. But here we have 4 different VPOCs on the same chart. We do not, of course, have the information over here on the right because that would be too confusing. But you can see during 4 different time frames how much different the volume point of control is. This is 250 periods clear down here, and you can see what happened, that this was basing for quite some time. And then it broke past that, and then the green lines, and I'll send these out when I send the charts out. I don't know if you'll really find any use for them or not, but I just wanted to be able to look at different time frames. Now the green is 90 volume point of control. The 30 volume point of control is red, and the 10 is black. And you can see that these two are very close to one another up here. But during this 30 period volume point of control, which would it's kind of, without the buckets on here, it's hard to see where it ends. But, I would just have to count back 30 days or get a visual for it. And this would be about 30 periods somewhere, I would say. I don't know, I'd have to go look. But you have a lot of activity there on the 30 period. And now when we get into the much shorter time period, the volume point of control obviously is going to be a lot different, both with the 10, I'm sorry, this is a 90 here. I said it was a 30, but you can see that it had to be the 90 because there just wasn't that much activity there. So during this period, this is the 90 period, and then there's the 30, and then there's the 10 up here at the top. Now, who's in control right now? Well, using a 10 period line, so in the short period, I would say that the bulls are in control of the volume point of control with the 10 period because it's above the line, and also with the 30 period. And I'm just saying that because closing price is above these two lines. Now that leads me to this chart, which you may find very confusing. But here's my thinking. And Matthew, you tell me if I'm crazy or not. This is what I came up with today. And I thought I would incorporate not only the industry group right here, but this is the 10 period volume point of control line, and of course we have the VPA flags. And my thinking is that if the group is moving up for one confirmation and over a 10-day period, which is a relatively short period of time, if the price is above the 10-period point of control, that the bulls are in control of that stock. So if we tie all of these together, you can see that there's an effort to rise here, effort to rise there, came down, stayed above the 10-period volume point of control, and then on the way up, it never did challenge that. And right here, there was some challenge, but look what happened. The group started coming down, but it held, and we started getting some more VPA signals here. And then when the group started rolling over, the stock started rolling over too, and notice that it goes below the 10-period volume point of control. I don't know if this is valid thinking or not.
I actually think it probably is, especially on that shorter time period. A reasonable way of looking at it's the volume, it's the volume's support of the stock, and so I think so. I think there's something to be said for this kind of a graph.
Well, I'm going to be testing it, so we're going to find out. John Boone says the volume point of control should have a horizontal length extend to the look-back period. That would eliminate confusion about the look period. That's true. And John, I did not show it on that other chart because I had 4 look-back periods. That's why I didn't have them in there. But on here, we could put it in.
I think what he's talking about, obviously we created our volume at price indicator by amalgamating ideas from various ones. And Anna Cooling's version of volume at price, the line is all the way across the chart. It doesn't have any indication of what the look-back period actually was. But it's certainly something we should probably try and add in so that when you're in that line mode, there's some sort of tick or bar or something that shows you where it ends, or perhaps have it just extend the length of the period, so it doesn't actually go the whole length of the chart. It just goes a certain.
Let's see. I want to try some. I haven't really messed with these other colors, Matt.
Color options, yeah.
Getting back to this, and you know, if this is a valid way to think about this, I don't know. I'm just going to have to do more observation. But when we get periods like this, where there's chop and the price goes above and below the volume point control, it really tells us that nobody's in control at that point. And also here, but then when you have these VPA signals and you get an obvious clearance above that volume point of control, that line, that may just be a valid way to keep you in a trade without bailing out. Now this one has gone from what, $36 up to well, it's about $10 higher right now. So it I'm certainly going to be experimenting with it. It looks very close to an Ichimoku cloud. Well, maybe it is. I don't know. But you know what I like about it? It brings the volume into play. And we can also use the flags, and we can also use the group. And you know, I can't overemphasize, as you know, if you've been listening to me, the importance of the group. And here is you know, just another great example of a group on the move right here. And the stock is moving at the same time. Now this, I think in the airline group there's, you know, 18, 20 stocks. I'm really not sure. In fact, let's change to the industry group and let's look at a couple of other stocks using this. Here's Alaska Air Group, you can see that about the same time that well, as the group was going up, it was moving up too. Pretty much stayed above this 10-period volume point of control. On the way down, it was below it most of the time. You know, you're going to have reactions like this, which obviously are going to throw you off. Let's look at Delta Airlines. Now, Matt, on this 10 period with this big spike up here, that is due to the volume occurring where?
Well, you have to remember that every single day of the line, a new day is added to the volume pool, and a new day and an old day is removed. And so when you lose an old day that had a lot of volume that was maybe contributing to a bunch of places, and then the new day doesn't have as much volume, and so it doesn't distribute as much volume, you end up with these hiccups essentially. And if you go back, you could see, well, you could, with 10, you could probably just count it yourself. But so if you look here, is that 10? Is that this is
10.
The purple line is 10, but are the volume bars, the horizontal bars,
I think they're 10. I think I put them in at 10
put them in at 10?
Yeah, the buckets.
The buckets. Yeah,
they're
okay.
at 10 also.
And so 10 periods on here, you've got, see those two big red volume bars about just before February 8th? Yeah.
Right
those
in here.
Two guys, yeah, those two guys. And then as you move forward, those guys will become more than 10 periods away. And so the distribution changes, which is why you get the big hiccups in the volume point of control, because you have to remember that every day, one day is removed and a new day is added. But these volume bars, they distribute their volume across many buckets. It's not like a moving average. You know, a moving average, a new day is added and a day is subtracted every single day also. But with these buckets, you get this effect, and it causes those interday hiccups essentially. The math is right. I was.
Oh, I'm not concerned about the math.
Yeah, well, I was very concerned by the math.
Okay, here, Matt, we get this big volume spike here on this day.
And so you lost a day and gained a day, and the day you gained is that huge volume day. And notice how it's a wide, the price, the low to high during that day was very wide. And so it would distribute that big volume equally. The full amount of the volume is added to every single bucket the price crosses that day. And so you can end up with spikes like this, because that big volume gets contributed to a whole lot of buckets.
Okay, so if we went in and only counted the close, let's see what that does, okay?
Okay.
Oh, that smooths it out, doesn't it?
Yeah, well, it's because no one day gets contributed to more than one bucket in this mode. And so that might be, futures traders, they use the high to low because they're looking at tick data practically. You know, it's 1 minute bars. But for end of day pricing, maybe the close is far more significant. But it's still just, it's still an estimate. We'd have no real way of knowing what price during the day the volume really traded at, and which is why we distribute it to all the prices. When in reality there actually was, there were prices in between that received and didn't receive volume, but we don't really have any way of knowing. You know, we just have one volume per value.
This is 30. I don't think that works as well as the 10.
Yeah, no, it doesn't seem
Something
to
like this. And I think maybe let's go back to where I had it to begin with. Let's look at one more stock here. Any questions? Yeah, Ron, if I increase the number of buckets, it would smooth it out, but I just did that and it took it further away from the price. You know, maybe there's a compromise here along the way. And all stocks act differently, of course, because they all have their own personality. Matt, see that question that Pat put up there?
Yes. So basically, if bring up the option dialog for the volume at price.
Sure.
If you don't have the only count close not range, if that's not checked, then every bucket that the low to high intraday value crosses will get a complete copy of the volume from the day. So if the stock traded 10,000 shares and the price crossed 3 buckets, 10,000 would get added to each of the buckets it crossed. If you check the box so that only the close, then the 10,000 would only get added to the one bucket that the close is inside of.
So if it crosses multiple buckets without this being checked, they all get the same amount.
They all get the same amount, and it's because we have no way of really knowing where the volume went during the day. I mean, there really actually is an answer to that. I mean, the volume actually traded in discrete steps inside during the day, but we don't have the tick data to go with it.
Right.
And so but as a result, what it means is the total amount of volume in any one bucket can be vastly more than the amount of shares traded over that period, because we count more than the volume can get counted more than once. But it's all scaled together relative to this stock you're looking at. So you can't really look at two different companies and compare the size of their buckets, and the volume at price buckets for one stock is only relative to that stock.
Sure. Okay, Paula wants me to check this bucket here, or this dialog box. So we're only counting the close here. So everything would be assigned to the closing price rather than distributed over every bucket that it touched. And I'm only using 10 buckets here, I believe. What am I doing here? Let's see what I have here. I'm using 10 volume buckets here. Now when I deselect that, where it's spread out over multiple buckets, the multiple 10 buckets, then it smooths it out considerably on this stock.
And some of that is because if you look at the stock, its intraday range is actually really wide compared to, I mean, this is a $20 stock, and each one of those bars is $3, $4 a day up and down. And so a different stock, you will get a different effect because the number of buckets it'll cross is higher.
You want me, Paula, you want me to put the buckets in? Okay, and do you want this checked or unchecked? We'll leave it unchecked. Okay, you want it checked. So this would be on the close only, taking the close only into account. And you can see that this stock is really consolidating around here, so we don't really see anything. But there is only a single bar here now, it looks like. It's really hard to see. Let me go back in here. And if we, because all these closes were together over the past 10 days, we're seeing only, it looks like only one bucket Right, Matt? Is that the way you view it?
Yeah, I mean, almost all the closes, and you can change the price indicator to be a line so that you can see where the close actually is. But, you know, it's hard to take a chart view that you've already got and then make it a demonstration of an indicator. But you can see how by using only the close, you get a very gap-ish version of the buckets, because the total range of the buckets is still the high to low of the stock. And so the size and position of the buckets is going to be the same, but which bucket gets credit for each day's volume, it narrows it down when you don't use the range, when you use just the close. And so you end up with a much more spot-ish version of the volume lines.
Yeah, I think it's...
And you know, they're both valid ways of looking at the data. You just have to kind of decide which one's going to work well for you. Yeah, these colors are... we probably need even more color presets.
Well, I've got so much junk on this chart. But I just wanted to see how they would all work together, you know, the VPA and the group and the volume, 10-day volume point of control.
And I do think the VPA and the volume at price, and yes, all these indicators and things start with V, and it starts to get confusing after a while. But the volume price analysis, the idea that the volume influences the way the stock trades, is really connected to this volume at price. I mean, if any of you were at the October workshop, Anna Cooling's version of talking about this should have drove it home that this is really, there was a reason we didn't add this randomly, although it actually was on the to-do list for a long time, because I think it's a very neat concept. But it really is very connected to the VPA flags and alerts. The two can work hand in hand really well.
This is a 15-day version of it. Anybody else have any questions? Well, anyway, we will still be working with this. Like Matt said, you know, we haven't had this too long, and tying it all together is the key. Thanks. I'm glad you enjoyed it.
Thanks everyone.